statement, we looked at the information. We had sales, operating expenses, net profit before tax, income tax, and then we have net profits after tax. And then they said, note operating expenses include the following: depreciation on equipment, depreciation on vehicles. Then we have interest on loan, and we have interest and on overdrafts. These are the things that we looked at. Land and buildings, we did look at it. Equipment, we did look at equipment under fixed asset purchased, where investing activities. Accumulated depreciation, vehicles at carrying value. We did look at all of these. These are the non-current assets, of which they help us in terms of like getting the cash flow from investing activities. Fixed deposit, we dealt with it. Investing activities. Inventories, we dealt with inventories. Trade and other receivables, we dealt with that, which is like investing activities, and then we have like that inventories and receivables that were from the changes in working capital. Okay. So now what I want us to look at now is the bank. If you look here, the information in the bank account, we have money, 50,000 rand as the opening balance. We had cash of 50,000 rand in the bank. But looking at the current year, 30 June 2014, there is nothing here. If you look at this, which means now we had a bank overdraft of 29,200 rands. Okay. And then we have cash float of 4,000 in the previous year, and then 6,000 in the current year. So the only thing now that we need to do, we need to go to the note. We need to go to the note for cash and cash equivalents, which is note number 2 from our note. So of 2013, of 2014, and then let's see. In terms of the bank, how much cash we had? We had 50,000 rands, which is the opening balance at the bank. But what about petty cash? Did we have anything about petty cash? If we look at the information, we don't have petty cash, but instead we have cash float. So under petty cash, I'm going to have what? I'm going to have 0. But how much is our cash float? Looking at the information provided, we have 4,000 rands as what? As cash float. So which means I'll go and record my 4,000 rands there. And then how much is my total cash and cash equivalents? For 2013 financial year, that was 54,000, which means that is the opening balance of cash and cash equivalents. Then now the closing. If we look at the closing balance, we did not have cash in the bank, but instead, what did we have? We had a bank overdraft of 29,200 rands. We had a bank overdraft of 29,200 if you look here. So which means now I'm going to record it here as what? 29,200. I'll make it negative. 29,200 rands because it's an overdraft. And then what about petty cash? Do we have petty cash? Nothing, but we have a cash float of 6,000 rand. So I'm going to have 0 here, and then I'm going to have a cash float of 6,000 rand. And then how much is the total cash that I'll be having? 23,200, which is an overdraft. That is the 23,200, which is negative. Okay. 23,200, which is negative. Okay. Then now what about the change? What about the change? We can see here that the change is how much? 79,200 rands, and then okay, then it's gonna be 0 this side, and then we have 2,000 this side, and then now it's going to be 77,200 rands. Okay. But what is more important? What is more important about this? Let me just change my formula so that maybe we can get this thing clearly. See, 79,200. If you look here, because we're having a bank overdraft, if you look at this information, we had 54,000 in the previous year. We had how much? 54,000 rands as opening balance of cash. But now we used cash up until we had an overdraft of 23,200 200 rands, which means now the 54,000 rands that we opened with, we used it and finished it. Then we started using 23,200 extra. So which means in total during the year, how much we used? We used 77,200 rands, as you guys can see there. Okay, so going to my cash flow statement. Going to my cash flow statement, what am I going to have there? Let me just hide this part for now, so that we can see how we're going to record it there. If you look here, for my cash and cash equivalents at the end of the year, how much do I have? I'm having an overdraft. It's there. But at the beginning, I'm having 54,000 rands. Then cash and cash equivalents at the end of the year, how much do we have? We're having negative 23,200 rands. Okay. And then how much we're going to have. You must be able to interpret this thing, because this thing, guys, you have to be like, you must talk to it, right? You must be able to interpret it to say, at the beginning of the year, I had 54,000 rands. And then at the end of the year, I have an overdraft of 23,200 rands, which means this money that I had, which was 54,000 that I had at the beginning of the year, I used it and I finished it. And then I went extra with 23,200 rand as an overdraft, which means now the total amount that I've used at the end of the year, it was how much? It was 77,200 rands. That's the amount that needs to be here as what? As the net change. So this is, we know that we transfer this information and then we take it to the section of our cash flow statement. Now I know very well that what is going to happen if I take my cash flow from operating activities plus cash flow from investing activities plus cash flow from financing activities. I need to get the 77,200 that you can see there. But we have not yet done the cash flow from financing activities. Let's go and check that and see. We have not done the cash flow from financing activities. Let's go and check that. And then we start working on it. Proceeds from shares issued. What happened there? There is it here. Ordinary share capital. How much do we have there? You can see that our ordinary share capital moved from 900,000 to 1,160,000. Is this an inflow of cash or an outflow of cash? Are we getting an inflow or outflow?
Inflow.
Inflow of cash of how much? How much inflow of cash are we getting?
260,000.
260,000 rands. Thank you on that. It's a movement. Yes, we can see there that we issued additional shares, which increased our share capital from 900,000 to 1,160,000. So that means that we issued more shares, and then there will be an inflow of 260,000 rands, inflow of cash. And if I do my workings, that is going to be my 1,160,000 plus, no, sorry, minus 900,000. Okay. So we're getting an inflow of cash. We're getting an inflow of cash of 260,000 rands. Cash paid for share buybacks. We didn't buy back any shares, so we're going to have 0 there. Then proceeds from long-term loan. Proceeds from long-term loan. Long-term loan, we always have to do a T account. I always encourage us to do the T account when it comes to the long-term loan. So I'm just gonna do quickly. I'm just gonna do a T account quickly here for us to be able to do our loans. Very important, guys, that we are able to do the T account. T accounts are the ones that they're going to save us here. Okay, so this one is going to be a mortgage loan, as we can see there from the information that is provided to us. Mortgage loan from WesBank. This is the mortgage loan that we have from WesBank. Okay, Then now opening balance, because this is a liability account, it increases on a credit side and it decreases on a debit side because it is a liability account. Because it is a liability, it is a liability account. Okay. Now, which means I'm going to have my balance here. My balance carried down. Oh, sorry, my balance brought down. Okay. Of how much? If I look at the trend for my loan, what happened there? There is the loan there. If you look at the information here, what happened with the loan? Did it increase or decrease by looking at the things here?
Increase.
Yes, definitely. It increased from 200 to 240,000. So which means now what happened here? Did we borrow more money or we paid it?
We borrowed more money.
We borrowed more money. Yes, exactly. We borrowed more money. So my opening, which means how much additional amount of money that we borrowed here?
40,000.
That is going to be the 40,000 rands. But I want us to go to the to our T account and finalize it there. 200,000, that is the opening balance. 240,000, that is our closing balance. Okay, 200,000. It is our opening balance. That is the 200,000. That is balance carried down, balance brought down, sorry. And then our balance carried down, we're going to have what? Balance carried down, we're having how much? 240,000 rands. Okay. That's what we have for our balance carried down. So I'm going to show my totals here under the just going to show my totals here, and then I show my total this side as well. Okay. And then we know very well that we need to look for interest expense here, right? We need to look for interest expense. That is the interest on loan. Then we need to go and check how much we have as the interest on loan. By looking at the things here, we have interest on loan of how much? 28,800 rands. 28,800 rands, which is the interest on loan. 28,800 rands. Okay. That is our interest on loan. Okay. Then now, which side is the bigger one between the two? If I add these two sides, how much? This is going to be the 228,800. But this side we have 240,000. So the bigger side is our debit side. We have 240,000 this side, and then this side, obviously, I need to have the same, which is 240,000 rands. Instead of paying the loan, we didn't pay the loan, but instead we borrowed more, right? Instead, we borrowed more. We didn't pay the loan, but instead we borrowed more. How much did we borrow? When it comes to the loan, we borrowed how much? 11,200. I hope you guys can see the additional amount that we borrowed. It is 11,200. Not really the 40,000, but looking at the numbers here, obviously they show that we received additional 40,000 rands. But the exact amount that we received is 11,200 cash, the amount that we received. But it makes 40,000 if we add this interest. The other one is the interest. Remember that interest, if you add the interest in the bank, it becomes 40,000 rands there. Okay. But the proceeds from long-term loan, is how much? The proceeds from long-term loan is actually 11,200 rands, not 40,000 rands. Does that make sense, guys? Does that make sense? Repayment of long-term loan, that is going to be 0 because we did not pay the loan, but instead we borrowed more money, which is 11,200. Now look, our cash flow is not balancing now. Our cash flow is not balancing now with how much? 28,800 is out. Remember, here, when we go there to our cash flow from financing activities, what did we say there? We said we have an interest paid there of 28,800. You see this interest on loan. We didn't pay this interest. We did not pay the interest because there's nothing on the bank at this side, which means the interest was not paid, and I cannot go and record it there and say interest paid. So this side, the only interest that was paid is the one of bank overdraft. So I don't need to say to have 31,200 there, but I need to have how much? 2,400 rands only. That's the amount that I need to have. So that's the correction that we needed to go and do there on top. Because after doing our mortgage loan T account, we were able to identify that, okay, the interest was not paid actually. So we can't put it there on the cash flow statement as what? As interest paid, because it was not paid. Does this one make sense, guys? Do you agree with me or you don't agree?
I agree.
You do agree, Isma? On your side, do you agree with me? We didn't pay the interest.
Yes.
Yes, we didn't pay the interest, therefore we cannot put it there. It's unlike example 1. If you look at this example, you can see there was interest this side, but we made a payment of 516, and we said from that payment, we paid interest of 14,400, and then the capital portion that was paid also. And you can even see instead of proceeds this side, we have repayment of long-term loan. But this side, we did not pay anything. There is no repayment of long-term loan. So which means we did not pay the loan, we did not even pay the interest. So I need to remove it there as what? As interest paid. If we didn't have this bank overdraft interest, I was going to have 0 there. And then here I put the additional amount, proceeds, the cash that I've received, which is additional cash that I borrowed. So now, if you look now, our cash flow statement is in balance because I am adding operating activities, investing activities, and financing activities. I'm getting the 77,200, which is the same as the one that comes from the cash and cash equivalents. I think that's all that, guys, we need to be aware of for now. We're not done with the principles of cash flow. There's still a lot of principles that we still need to talk about, but we've covered more. The only thing that I want us to be aware of now is SARS income tax, because there are different methods. Other than that, everything else that is here, we're going to do it the same on the exam question paper. But SARS income tax may have some differences that we might have to look at, some other things that we might have to look at. I think I did tell you before that it is possible that when you do your SARS income tax, all the amounts, you might have everything on one side and nothing on the other side. So that one is something that I want us to look at right now. So there's question 2 that I want us to do on the 2025 question paper, right? So I want us to look at that. I want us to look at that question 2, and then not everything, but only few amounts, the only few things that I want us to look at there. If you look here, we have this question 2 that is provided to us. This is from the 2025 question paper. We did the question 1 for income statement and stuff. Question 2, fixed assets, cash flow statement, and financial indicators. I did tell you that you must be strong with your fixed assets when you're going to do the cash flow statement. Otherwise, cash flow would kick you out. This is the information that relates to Premier Ltd for the financial year ended 28 February 2025. So when the year is ending 28 February 2025, when is it starting? When is the year starting?
1st March 2024.
1 March 2024. That is the first thing that you need to look at is your financial period. You must know when is it starting and when is it ending. So here we're looking at question number 2. Let's go and see if we can deal with it. Okay. So what they required refer to information number D. So which means for us to answer 2.1, we just need information number D only. Calculates the missing figures indicated by Roman figure 1 to Roman figure 3 on the fixed asset note, right? On the fixed asset note. Let's go and see. Information number D only. Let's go and calculate these values there. I'll go to information number D. I won't bother myself looking at other things. But you see here, fixed asset note on the statement to the statement of financial position. We have it here. So we have buildings, we have vehicles that you can see there, and we have what? We have the equipment. Okay. Carrying value on 1 March 2024. This is carrying value at the beginning. We don't have carrying value for buildings. So we need to calculate that. And then it gave us carrying value for vehicles, for equipment. And then we have all the information except like the carrying value at the beginning for buildings. We don't have what? Disposals for vehicles. We don't have depreciation for equipment. So these are the only three things that we need to calculate. Looking at that information, additional information in respect of the fixed assets, what they're saying here, extensions to the buildings were completed during the financial year, which means there will be additions on the buildings. As you can see there was additions of 7,909,000, okay, 7.9 million. And then the second transaction, they're saying an old vehicle was sold as carrying value on 30 September 2024. The cost price of this vehicle was 510,000 rand, and its accumulated depreciation on 1 March 2024 was 330,000 rand. Okay, so this is the information about this disposal of what? Of the vehicle. Then equipment, we need depreciation there. Then they're telling us about vehicles are depreciated 20% per annum on carrying value. Additional equipment was purchased during the year. We can see there is additions there under equipment, indicating that additional equipment was purchased. Then equipment is depreciated at 15% per annum on cost. Now, guys, what I want us to do, I want us to start with number 1, buildings. How we're going to calculate the Roman figure 1 for us to get the carrying value at the beginning.
Carrying value at the end minus additions.
Carrying value at the end minus additions. Very good. So that's what I need to do for me to calculate. So I'm just going to do my 2.1. What I'll do, I'll just do my 2.1, and then I'm going to do my Roman figure 1, and then I deal with that. Okay. Okay, so what am I going to do here? I will say 15 million, 479,600, 15 million, 479,600 minus, how much am I subtracting? 7,909,600, 7,909,600, okay? Then how much am I getting?
$7,570,000.
7,570,000 rands. So that is going to be 7,570,000 rands, which means that is the amount for Roman figure 1. Okay, if we go and see there, that is the carrying value at the beginning. Then we're done, we move on from this one. Disposals. Remember here they're saying disposal, but I told you that this is a disposal at carrying value. So which means you need to calculate the carrying value of the vehicle that was disposed. So we're just gonna go straight to that information of the vehicle that was disposed. Okay. That is the second bullet. If you look here, that is the second bullet. So they're saying here an old vehicle was sold at a carrying value on 30 September 2024. It was sold at a carrying value on 30 September 2024. That is an old vehicle. The cost price of this vehicle was 510,000 rand, and its accumulated depreciation on 1 March 2024 was 330,000 rand. So what is the starting point for this one? What is the starting point for this one?
You subtract the accumulated depreciation from the cost of the vehicle.
Okay. We subtract the accumulated depreciation from the cost, which means like I'm going to say 510 minus 330, yeah?
Yeah.
Okay, 510 minus 330,000 rands. And then what do I do after that?
Then you multiply the amounts by 20%.
By 20%, exactly. I multiply it by 20%. Okay. So I'm going to say times 20%, nah? And then
you say 7 months of, then you multiply it by 7 months over 12.
7/12. Why are you saying that? Because it was sold, right? When was it sold? 30 September. So which means it stayed from March, April, May, June, July, August, September. Exactly. That is 7/12. Okay. And then how much am I getting?
21,000.
We're getting the 21,000 rands. So which means that is the depreciation for the current year, né?
Yeah, and then you subtract 21,000 rand from 180,000 rand, which is the cost of the vehicle. I mean, the carrying value of the vehicle before
And the
depreciation.
carrying.
Yeah.
Or before the depreciation. So I'm saying 510 minus 330 minus that 21, né?
Yeah.
510,000 minus 330, né?
Mm.
Okay, then I say minus 21. Then how much am I getting?
159,000.
159,000. So this 159,000 is that the amount that we wanted this side, eh? 330,000, 510 minus 330. And then we're saying minus the 21,000 rands. And then we're getting 159,000 rands. Is that correct? Eh? $159,000. Very good. Very good. So that is going to be the carrying value of the vehicle that was disposed. Am I right on that? That is going to be the carrying value of the vehicle that was disposed. Okay. Can we move on to the next one? We needed a carrying value. Sorry, what we needed here? We needed a carrying value, obviously. Yes, we needed the carrying value of the vehicle that was disposed, which means we're taking the cost, then we subtract the accumulated depreciation at the beginning, and then we also subtract the 21,000. That's very good. That's very good. The very good, Kinelwe. And then we're moving to the third one. Okay. What do we need from the third one? Let's see. Equipment, we need depreciation. We need depreciation on equipment. So which means now let's go and see the information about the equipment. They're saying additional equipment was purchased during the year. So which means what is our starting point on this one? Because we need to calculate the depreciation here. Now we need to calculate depreciation on equipment. Depreciation on equipment, here we have new and we have old. So we need to deal with them separately. We have the new equipment that was purchased during the year. They told us here, additional equipment was purchased on 1 December 2024. And I did say to you guys that whenever there's new and there's old, you must start with the new equipment that was purchased. And then after that, you deal with the old one. So looking at our fixed asset notes, the new equipment here was 320,000 rand, and it was purchased when? It was purchased on 1 December 2024. So what am I going to say here? 320. And then what do? I'm going to multiply it by how many percent? I'm going to multiply it by 15%. They're saying here 15% on cost, right? And we bought it on 1 December 2024. Do I have to apportion it or not? because it's new and I bought it on 1 December 2024. So how many months I'm going to use here?
Four months.
I'm going to use 4 months.
No,
So
three.
we're using 3 months now. Okay.
Yeah.
December, January, February. Yes, that is going to be 3 months. So I'll say multiplied by 3/12. Okay. And then how much we getting?
12,000.
12,000, right? We're getting how much? The 12,000 rands. Okay. Thank you on that. 12,000 rands. So that is the depreciation for the new vehicle. Then now the old one, the old vehicles now, which means we need to go back there. Looking at the information, we do have the cost price for the old vehicles. There is 2,630,000 rands there. So which means that is our starting point. That is our starting point. So what am I going to do here? 2,630,000 rand, but just multiplied by 15%. This one, I don't have to apportion it because it's an old one. So how much am I going to get here? How much am I getting as my depreciation?
$394,500.
394,500 rands. 394,500 rands. Okay, so this is a depreciation for the old. Now let's add them together to get our total depreciation. How much we're going to get?
406,500.
406,500, huh? Okay, 406,500. Thank you on that. So which means we have dealt with the first part that they were asking us here. I was just touching on this one, guys, but I was not that much interested on this. This is what I'm interested in. Calculate the following figures for the cash flow statement. These are the two amounts that I'm interested in: taxation paid, dividends paid. That's what I want us to do now. And then after that, I'll allow you guys to go and rest. Taxation paid. Let's go and look at the information. Remember, when you're calculating tax paid, I told you that you must prepare your T account. I don't want you to use the note. No, I want you to do a T account for you to calculate the taxation paid. So I'm going to say 2.2 here. And then the first thing that we're going to look at is what? Taxation paid. Okay. So when we're doing this taxation paid, I want us to do a T account. I want us to do a T account so that we can see if we can be able to do it to get the amount. So I'm going to what's debit, and I'm going to have credits this side. Okay, and then here, what am I going to do? What am I going to say? Taxation. Okay, this is SARS income tax. The account that we're preparing is SARS income tax. That's the account that we have to do. Is the SARS income tax account. That's the one that I want us to do all the time. When you're going to prepare, when you're going to do SARS income tax, or when you're going to calculate tax paid, you must always prepare the SARS income tax T account. Okay. Now let's go to the information. Remember, we need an opening balance here. We need a closing balance. Remember, this account, it can be an asset, it can be a liability. That's why it's tricky. It's unlike shoulders for dividends, will always be a liability. It's unlike loan, mortgage loan, will always be a liability. This one, it can be a liability, it can be an asset. So you need to be careful when you're doing SARS income tax account. Okay, let's go and see the information there. Which one is starting with? Okay, we're doing the taxation paid first. Looking at the information here, extracts from the statement of comprehensive income for the year ended 20 February 2025. Sales, operating expenses, interest expenses, net profit before tax, and we have the income tax here. So this is one of the information that we will need. You could see even here, that's how they provide the information to you. That's how they give you that information. Same thing. So you don't have to worry about that. You can see they gave you the income tax there, okay? And then there's extract from the statement of financial position on 28 February 2025, which is the current year, 28 February 2024, which is the previous year. So now we need to check these two information, okay? We need to check our SARS income tax here. SARS income tax, you can see there, we have it's sitting under current assets, this one. We have SARS income tax that is sitting under current assets. This is the closing balance, 220,000, but the opening balance is 0, right? And then if we scroll down, we have another SARS income tax that is sitting under current liabilities, right? And then the opening balance is 148,000 rands, and then the closing balance is 0. This is what I want. You see, opening balance was a liability, but now closing balance is an asset. You need to be careful when you're dealing with something like this. This one that is provided to you as a liability, it is the same as if it is provided to under the trade and other payables note. It's the same as this one. You can see on this one, both of them, opening and closing balance, were a liability, both of them. But in this one, opening balance is a liability, closing balance is an asset. Let's go and put the opening balance. Opening balance is a liability. So I'm going to say balance brought down this side for my SARS income tax. And how much is that? That is 148,000 rand. So I'm going to record 148,000 rand here. Okay. Then we know very well that my balance brought down should be this side. But looking at this information here, because the closing balance is not the liability, they will be in the opposite side if both of them are liabilities. But since SARS income tax closing balance is an asset, it will be on the same side. I'm going to have balance carried down on the same side. I'm going to have my balance carried down on the same side as the balance brought down, which is 220,000 rands. That's what I'm going to record here. You can see now balance brought down and balance carried down, they're both on the same side. And I still need to record my income tax expense here. How much is my income tax expense from the information that is provided? That is 1,736,000 rands. 1,736,000 rands. Okay. Then now, obviously, I need to get my total here. I need to get my total here, which is now how much? 2,140,000 rands. Okay. That is 2,140,000. Oh, sorry, 2,104,000. And then this side, I'm going to have what? I'm going to have bank. So which means this is going to be the 2,104,000 rands, which is the SARS, the taxation that was paid. Okay, can you guys see what's happening here?
Yeah.
You see how this one is different from this? Because this one, opening balance is on the credit side, but the closing balance is on the debit. Because both of them, they are sitting under payables, both of them. But if the other one is sitting under payables and then the other one is sitting under receivables, because this is receivables, this is payables, you see? Both of them, they will be on the same side. It's either they're going to be on a debit, both of them, maybe both of them, they will be on a debit side, or both of them, they will be on the credit side. It depends. It depends. It depends. Both balance brought down and balance carried down can be on the debit side, and then we only have income tax expense on the credit. It's possible to have something like that. I will show you a scenario where it's going to be like that. I will show you a scenario where it's going to be like that. It's possible that you may have this balance brought down. It's possible that you may have it this side, which is 148,000. What's happening there? What am I doing now? What am I doing now? Okay, it's possible that you have both all of these ones in this this side. Okay, balance carried down can be this side, which is 220. It's possible. And then we have nothing this side, and you have nothing this side. Okay. And then you only left with tax this side. It's possible. It's possible. And then you end up having bank this side as well. Maybe you're gonna have bank again this side, which can be, so now which means you're gonna have this and this here, and then here you're gonna say this minus this minus this, and then you're getting a 1,368,000 rands. It's possible you can have something like this, because if here, if I have 148 here and I have 220 this side, you see where there's zero, there's zero. If these numbers were swapped, the other one is here and then the other one is this side, you are going to get the scenario like this in your T account. But for now, I don't want to talk about this one. I don't want to talk about this one. This is how we're doing this taxation paid. Then another one now, we're going to have what? Another one now, we're going to calculate what? Dividends paid. Okay. We know very well that with dividends paid, you would have two options there. You can do a T account. You can also just add opening balance of the shoulders for dividends plus interim dividends. Then you're done. But you can also do a T account to do your shoulders for dividends. Then you know that you are done. Okay. Let's go and do it and see if we can. Let's go and try it. See if we can do it. Okay, please guys tell me when you're no longer following. But these are the things that we need to practice. That's why I wanted to do them separately. Shoulders for dividends. Shoulders for dividends. Shoulders for dividends. Okay, let's go to the information and see. Let's go to the information and see. Shoulders for dividends, I have opening balance. You can see now if the opening balance is under payables and then the closing is under payables, they will be in different sides on your T account. 840,000 is the opening balance. So I'm going to say balance brought down because this is a liability account. I'm just going to say balance brought down 840,000. You can see it's going to be like this because this one is a liability and then this one is a liability as well. So plus 1,400,000 shoulders for dividends, that is going to be my balance carried down, right? So that is going to be my balance carried down. So I'm going to have what here? Balance carried down of how much? That is going to be the 1,400,000. How much do we have there? 1,400,000 rands. Okay. 1,400,000 rands is the balance carried down. Then I know that I'm going to have a total. I'm going to show total here. I'm going to show a total here again. Now, okay, guys, we know that I need dividends on ordinary shares here. Dividends, ordinary shares. dividends on ordinary shares, I need to go and check. Remember here it's an interim plus final. Okay. We always have what? We always have interim plus final. Let's go to our information now. If you look here, they're saying the company had 3 million shares in issue on 1 March 2014. Okay. 1,050,000 new shares were issued on 30 June 2024. An interim dividend of 32 cents per share was paid on 31 August 2024. So for me to calculate my interim dividend, I need to say 3 million plus 1,050,000 shares. Then I multiply those ones with 32 cents. So I need to calculate my interim dividends here. I need to calculate my interim dividends. How much? I said I'm going to say 3 million shares plus 1,050,000 shares. 3 million shares plus 1,050,000 shares, right? And then what do I do after that? Multiply by 32 cents. Multiply by 32 cents. Okay. Then how much am I going to get? How much am I going to get as my interim dividend? How much are we getting here as our interim dividend?
$1,296,000.
1,296,000 rands. Thank you. That is our interim dividends. Then final, how much will be our final dividends? Let's go back to the information. Final dividends was declared on 28 February 2025. We know very well that final dividends is equivalent to the shareholders for dividends at the end, which is 1.4 million. So I'm going to have 1,400,000 rands here. So my total dividends, ordinary dividends, is how much? Going to be the 2,969,000, right? That is my total dividends on ordinary shares. Okay. Then what do I need to do now? I need to take this 2,969,000, 2,696,000, 2,696,000 rands and put it there as what? As my dividend on ordinary shares. 2,696,000. Then I get my total. And then I get my total this side as well. And then how much am I going to have as my bank? Because I need to get my dividends that were paid. So I'm going to say this 3 million minus the 1.4 million. Then I'm getting how much? The 2,136,000 rands. The 2,136,000 rands. So this is what I'm going to have in this one. Is what I'm going to have. And then we know that we're done. But guys, you know very well that you can also take your interim dividends to calculate your dividends paid. You can just take your interim dividends plus the opening balance. You can take your interim dividends plus opening balance. So our interim dividends here, we do have it, which is how much? 1,296,000, right? This is the amount of interim dividends that we calculated. Then shareholders for dividends, opening balance. Shareholders for dividends, opening balance, right? So this is how we can also calculate our dividends that were paid. So how much is our opening balance? 840,000 rands. So I can say 840,000 rands here. And then how much am I going to get? I'm going to get my 2,136,000 rands. Okay. That is my dividends paid. So this is another method of which it gives you the same one as the one that we did there. Okay, I think I wanted more. This one, nothing has changed on dividends paid. It's still the same as how we have been doing it on the other side. I wanted to emphasize more the taxation paid, guys, please. I wanted to emphasize the taxation paid. You must know very well that it's possible that you can find scenarios that are odd like this one. Then if you can master that, I think you are good. You are good to go. Any questions on your side? Inelwe?